Here's a number that should stop you cold. China controls over 60% of the world's rare earth mining and nearly 90% of its processing. Those minerals power every EV battery, every smartphone, every guided missile. And right now, Japan is making a bold move to change that equation forever. According to the Nikkei, Tokyo is dispatching an official delegation to Greenland to evaluate rare earth extraction on the island. This is not a rumor, this is not speculation. This is government-level strategy, unfolding in real time. And it carries massive implications for the stock market, for ETFs, for Federal Reserve policy, and ultimately, for your portfolio. In this video, you'll discover exactly why Japan's Greenland delegation is a market-moving event, which sectors stand to win and lose, how this fits into the broader geopolitical supply chain story, what it could mean for interest rates and the S&P 500, and, most importantly, what you as an everyday investor can do right now to position yourself intelligently. Let's get into it. First, let's understand what rare earths actually are and why they matter so much. Rare earth elements are a group of 17 metallic elements, names like neodymium, dysprosium, and lanthanum, that are absolutely essential to modern technology. Without them, you cannot build a wind turbine. You cannot manufacture an EV motor. You cannot produce the advanced semiconductors that run artificial intelligence. The International Energy Agency estimates that demand for rare earth elements could increase by as much as 400% by 2040, driven entirely by the clean energy transition. That is not a niche story. That is a tectonic shift in global commodity demand. And right now, the supply chain for these materials runs almost entirely through Beijing. Japan knows this. Europe knows this. Washington knows this. Now let's talk about why Greenland, and why now. Greenland sits on one of the largest untapped rare earth deposits on the planet. The U.S. Geological Survey estimates the island holds significant reserves of critical minerals including rare earths, uranium, and zinc. Geopolitically, Greenland has become a flashpoint. The United States has openly discussed acquiring it, and Denmark has been forced to assert its sovereignty more loudly than at any point in modern history. Japan's decision to send a delegation is a calculated move. Tokyo is diversifying its supply chain away from China, a strategy it has been quietly pursuing since China temporarily cut off rare earth exports to Japan during a territorial dispute back in 2010. That incident was a wake-up call. This delegation is the long answer to that moment. Japan is playing the long game. So what does this mean for markets? Let's be precise. In the near term, the S&P 500 itself will not move dramatically on this single headline. The index is too broad, too diversified for that. But at the sector level, the signal is clear and strong. Materials stocks, companies involved in mining, refining, and processing critical minerals, are direct beneficiaries. Defense contractors, given Greenland's strategic Arctic location, attract renewed investor attention. Clean energy ETFs, which are heavily weighted toward EV supply chains, stand to gain if a new Western-aligned rare earth supply corridor opens up. On the flip side, any company overly dependent on Chinese rare earth sourcing faces margin pressure and supply risk as geopolitical tensions continue rising. Now here is where interest rates and the Federal Reserve enter the picture. And this connection is one most retail investors completely miss. Large-scale resource extraction projects, the kind Japan is evaluating in Greenland, require enormous capital investment over long time horizons. When the Federal Reserve keeps interest rates elevated, as it has done with the Fed funds rate sitting in a restrictive range to combat inflation, the cost of financing those projects rises sharply. Higher rates mean higher hurdle rates for mining projects. That slows investment timelines. Conversely, as the Fed begins easing, which markets are currently pricing in over the next 12 to 18 months, capital flows back into long-duration, capital-intensive projects exactly like this one. So watch the Fed's rate path. It is not just about mortgages and credit cards. It shapes when and whether projects like Japan's Greenland initiative reach financial close. The macro environment and the geopolitical environment are linked at the hip. Let's talk about ETFs, because this is where everyday investors can actually act. You don't need to pick individual mining stocks. You don't need to open a foreign brokerage account to buy Japanese equities directly. Several ETFs give you targeted, diversified exposure to critical minerals and rare earths. The VanEck Rare Earth and Strategic Metals ETF, ticker REMX, holds companies across the rare earth supply chain globally. The iShares MSCI Japan ETF, ticker EWJ, gives you broad exposure to the Japanese equity market, which stands to benefit if Tokyo successfully secures a new strategic resource corridor. And for those watching the broader materials theme, the Materials Select Sector SPDR Fund, ticker XLB, provides S&P 500 level diversification within the sector. Do your own research on each of these. Look at expense ratios, holdings concentration, and liquidity. But the thematic tailwind here is real and is measured in decades, not quarters. Here is the bottom line on risk. This story is early stage. Greenland's government has historically been cautious about large-scale foreign mining operations. Environmental concerns are significant, and local politics matter. Japan's delegation is an evaluation mission, not a signed contract. There is genuine execution risk. Supply chain diversification takes years, sometimes decades. Do not pour your retirement savings into a single rare earth mining stock based on one Nikkei headline. Spread your exposure. Maintain diversification. Think in terms of themes, not individual bets. The opportunity is real, but so is the patience required. This video is for educational purposes only and is not financial advice. Always consult a licensed financial advisor before investing. If you found this analysis valuable, hit that like button right now. It genuinely helps this channel reach more people who need to hear this. Subscribe to YieldWire so you never miss a data-driven breakdown like this one. And check the description below. We've linked resources and tools to help you research critical mineral ETFs, track Federal Reserve rate decisions, and monitor S&P 500 sector performance. The link is down there. Use it. The investors who act on well-researched themes early are the ones who look back a decade from now and say they saw it coming.